How's everyone doing? Welcome back to another episode of The Banker Next Door. I am your host, Dr. Joe Berquist. Today, I've got a great guest coming on, Ryan Stillwell, who basically is a commercial insurance owner and agent. He wears a couple different hats in his roles. We'll get into all that in just a minute. But I thought that this episode would be great for anybody who's basically in the commercial real estate world, certainly anybody who owns a business, but I think we're going to focus a little bit more in on commercial real estate today, talk a little bit about that. What kind of insurance do you need? Kind of ins and outs, different things you should be aware of. And without further ado, I am going to bring, if I can hit the button here. There we go. All right. Ryan, how are you doing today, my man?
Good, Joe. Thanks for having me.
Great. Absolutely. So could you, I guess, kick us off here by just talking a little bit about Stillwell Partners and I guess just how you started the company, how long you guys have been in business, maybe what kind of got you going down this path?
Sure. So I'm the principal here at Stillwell Risk Partners. We are a risk management and commercial insurance firm. So we do the insurance brokerage, but really our focus is on the risk management first, insurance second. So we do a lot of prevention first type of educational approach to tackling risk management and insurance. My business has been around for the last 4 years. I've been in insurance for nearly 20. So jumped out on my own about 4 years ago and still here. So
very nice. Very nice. And I know we're going to talk a little bit about commercial property today, but is it fair to say, is that kind of your primary focus, or do you provide other things too, like just like general liability, workman's comp? Like, do you get into any of those type of service for business customers as well?
Yeah. So what we do is a very well-rounded property and casualty insurance for the commercial side. So whether it's general liability, workers' comp, commercial auto, your cyber liabilities, your management liabilities, the property, of course, and everything in between.
Nice. Very nice. So I think we're going to focus our conversation today here on commercial real estate, in particular, multifamily, maybe small retail small strip centers, things of that nature, commercial buildings, industrial buildings. We're going to kind of, hit on a little bit from each property class. But what would you say is, so I'm a customer, and let's say I've got a 50-unit apartment building, and now I need to get commercial insurance on that. So walk us through, maybe tell us a little bit about the process, the ins and outs, pros and cons, like maybe things we should be aware of, and I'll throw it back to you.
Yeah, absolutely. So if you mentioned a 50-unit apartment building, habitational real estate is really a very difficult market right now. Especially in our area, right? We see a lot of older buildings, and a lot of insurance carriers have really taken it on the chin with losses from habitational risks, right? So the first thing, if you're in that market, that you need to know is that the market is very hard. Pricing is very difficult. A lot of carriers have dropped out of offering coverage for habitational commercial property, unless it's new property, right? If it's built before 1990-ish, right? The last 30 years, not a lot of carriers like it. So what's important when you're looking for it is, how is the property maintained, right? Is the roof newer, or do you have a regular maintenance cycle? And how are you communicating that with the insurance company through your broker? Communication is key about that, all the different ins and outs about the property. A lot of times people think, oh, well, I have this building and it's 25,000 square feet and I need to insure it. Can you get me a quote? Well, let's go into the details, because the underwriters need to know if it's a property they're willing to invest in, right? In terms of insuring the property. So that's the first thing to know, is just what the market's like right now. It's been hard for a couple of years. There's a lot of reasons for that, which we can get into if you think it's valuable. I generally find that people are not, in this type of venue anyway, people are not really interested in the ins and outs of the insurance coverage. I can go into some detail there if you think it's needed, but that's kind of where the market is right now. Does that make sense?
No, I think that was perfect. I think that's exactly the kind of thing that people are looking for an understanding of, of like, hey, I've got an apartment building. Like, what am I looking at here? Ryan, do you think there's a difference between if I have maybe what you would consider like a class A apartment building, like say it's like 400 units, it's got a beautiful pool and a gym and all these other amenities, and I'm in a good location. Is that type of property having an issue getting insurance, or is it just more like say smaller, older buildings that may have more obsolescence and different issues and things, maybe foundation or roof or whatever the case may be.
Yeah, I mean so if you're looking at a few different options, right? If it's smaller, it's often harder because the exposures are still significant, and a lot of times the insurance company can't charge the amount of premium that they would need to make it profitable business for them. If you get an older, smaller property, those tend to be a little bit more difficult to write. If you've got a new property and it's Class A, like you're talking about, and it's in a good location, what the insurance companies look for is what's the weather like at that location, right? What's the potential for catastrophic loss? When you get into the larger accounts, the insurance carriers that you and I deal with are what we call our like direct markets, but then above them, a layer above them is called reinsurance carriers. And a lot of times when you're getting it, especially in the bigger property risks, the insurance companies we deal with have treaties with the reinsurance carriers, and those carriers really dictate what the carriers we deal with can write, what their capacity is, how much they charge for it. So there's different layers that have to be taken into account there. But money does talk, right? So if you get a pretty sizable, whether it's 400 units, like you said, if it's a resort, if it's like industrial, right? It depends on, there's a lot of factors that go into it, but if there's a lot of premium that goes with it that they can charge for, there sometimes, there's a little bit of room there as well.
Okay, interesting. Any different with any of the other segments? Like in other words, if I were to get a 5-unit, let's say a small 5-unit retail strip center, not like anchored with a food store or anything like that, just say like a mom and pop center with a couple, 4 or 5 stores in it. Any issues getting insurance with something like that today, as opposed to maybe a small apartment building?
Not typically, especially if you're talking about a retail strip shopping center. You're not seeing a lot of high risk exposures in there. You're not seeing industrial. You're not seeing manufacturing in those, right? The one thing that insurance carriers look out for is like restaurants and cooking and fire exposure. Mm-hmm. But as long as the property is in good condition, the commercial property specifically is a lot easier than if it's residential and habitational.
Okay, interesting. Yeah. And then, and what about office? With some of the issues that we're having with particularly more urban office, larger, more urban office buildings, are you getting, maybe not pushback, but are you getting any kind of, I would say, like hesitancy from some of the carriers to basically say like, hey, that 10-story office building over there in Conshohocken, maybe we don't want to, finance that, that kind of thing?
Yeah, it's very specific to a lot of different factors, right? So location matters, right? In Conshohocken, there's potential flooding risk, right? So that's something that they consider. Office has less exposure than some of your other commercial properties. So office is a little bit easier. What we have to worry about a little bit with office is how much of it is vacant, right? A lot of, your commercial office space, it's not as full as it used to be. And there are vacancy provisions within the policy that we have to be aware of to make sure that we're accounting for that. So it depends. Like if you have let's take an example, right? If you have a 10-story office building in Conshohocken that was built 10 years ago, we're probably okay with that type of thing. But if you have something that's in Philly and it's 1930 construction, and who knows what's happened on the interior of that building in 100 years, that's a little bit more difficult.
Okay. Yeah. No, fair enough. No, I think those are good. I think those are good examples. And I should add, just for the audience, a little bit of context there. So Conshohocken is a small town just on the edge, kind of like just outside of Philadelphia. But it's a good sized town. It does have a number of sky rises there, maybe 8 or 10 or 12, buildings that are, 8, 10, 12 stories, that kind of thing. So it is a little bit of a larger town, not quite a city, but it's definitely a larger town. And a lot of people who don't basically want to pay the Philadelphia taxes migrated to Conshohocken over the years, that kind of thing. I just thought it was a good example for kind of our area for what we were, the type of buildings we were talking about here. So, but anyway, moving on to what about industrial? Like if I've got a 200,000 square foot industrial space, is there anything in particular with that somebody would need to know about, like any type of quirks or different nuances that someone should be aware of?
Yeah. So one of the things that we look at, this is kind of industrial is a good example of this because one of the things we look at is we call it COP, right? COPE. It's construction, occupancy, protection, and I'm blanking on the E, but it's basically what we look at is how is the building built, right? What's the construction style? Who's occupying, right? Industrial, it's a higher risk typically. What are the protections, right? So what types of fire protections are in there? What types of security and safety protections are in there, right? And what does the business do, right? So it's those are the things we typically look at. So if you got industrial, it's higher risk, but there's also typically they're going to work with the fire department, right, to have a good plan in place for emergency. We can do some of that as well, and some of the emergency action plans that a business like that would have to have. So it's not just about the building itself and the occupancy. It's how do you manage in the event of an emergency, right? So let's say there's a fire, right? What is your action plan for evacuating people safely? How are you limiting the loss? Who are you working with beforehand to make sure you have a plan in place for when that emergency occurs? Communicating that is also important to the, when we're talking about the insurance perspective, because not just is the building itself are we looking at, we're looking at the business income loss from that. And you have an industrial manufacturing facility. Downtime is a loss of money, right? So the quicker you recover, the quicker you get back up and running, the smaller your claim will be.
Excellent. Hey, let me ask you this while I'm thinking about it, Ryan. If somebody is, what are maybe some different things on the insurance policy that an owner should be thinking about? Like for example, like a loss of income. If you, like, in other words, if you had again, let's go back to the apartment building, for example. So say you had a 50-unit apartment building, you had a fire, 10 of the units get damaged. The building's still okay, but those units are all messed up and are all going to have to be, renovated and cleaned out. And unfortunately, you may have lost those 10 tenants, and then you'll have to, rent those units out once you get the units repaired. But is there any specific coverages that somebody should, an owner or operator should be thinking about as part of that policy?
Yeah, absolutely. So there's a couple of basics, right? Is how is the property valued? Is it replacement cost or is it actual cash value? Actual cash value takes in account to depreciation. So it's a lesser valuation form. What's the coverage form? Is it basic, broad, or special? You always go for special if you can. It's the widest. It's the most comprehensive type of property coverage you can have. Beyond that, loss of income, like we had talked about. And making sure you have the right form on there, right? So is it loss of rental income included? If it's an apartment building, is it loss of business income? You have to make sure that you're looking at that and that you're valuing that type of thing properly. What often gets overlooked is doing a business income worksheet to really understand where your income is so that you can set appropriate levels for that. Sometimes you can get that included on an actual loss sustained basis, which you don't necessarily have to do that at the time. But if a lot of times for like a manufacturer, we have to determine what is the right level of business income coverage, so we fill out that worksheet to make sure it's properly protected. There's one other thing that I'll mention here that's a little bit less common or something that people don't necessarily look for. It's a coverage called law and ordinance, right? So this is particularly important for older buildings. The way that the coverage works, it will pay you up to replacement cost for whatever limit you have there, as long as you're meeting the co-insurance requirements. And I'm not going to get to like a ton of detail on this, but the way it works is, let's say, I'll give you an example here, right? So let's say you have that apartment building and it's a 50-unit apartment building and enough of the building is damaged that a city inspector comes in and says, okay, this is unsafe to live in. We have to tear the building down. But if 30 or 40% of the building is undamaged by the fire, that's not covered by your standard building limit of insurance. You have to have the ordinance and law coverage for, there's a couple different sections of it. The one specifically we're talking about is the undamaged portion of the building. And it's something that can be relatively easily overlooked if people aren't looking for it. So.
Okay, interesting. And then just a couple other questions for you on this. So say you determine a property, and this is commercial now. Say this is a commercial property is determined to be in a flood zone. Is that something, would you find a carrier to provide some kind of flood insurance on that? Or is that something you would look toward, maybe like a government program or something like that?
So both. There's the FEMA program, which is the National Flood Insurance Plan. And but there are limits on the amount of coverage that you can have there for a commercial property. The highest limit you can have on an NFIP program is $500,000, right? So
Okay.
there's a few different options now that there didn't used to be. There's private flood insurance, there's excess flood insurance. So we would place any of that stuff depending on, you don't have to go somewhere else for that.
No, great. And the only reason I ask that is because a lot of times, because of the laws, if you're a bank and if you're lending money to somebody, you're required by law, you have to run a flood search. And if it is determined that that property is in a floodplain, you have to have it has to have flood insurance on it. But I wanted to ask the question because it is very important for people. I think a lot of people are under this assumption that if you just go out and get flood insurance, that boom, you'll get the whole property will be covered and like kind of similar to like property insurance, and that is not the case. It's very different. There's limits on it. There's, like you said, I mean, you do have a couple other options now with with some of the other private insurance providers and things like that. But it's just good. I think it's just good information for people to have to just kind of know what to expect and that kind of thing.
Yeah, no, that's an excellent point. And it's also worth mentioning that even if you're not in a flood zone, you can be flood zone adjacent and there's still flooding risk. So like you said, when you're in a flood zone and there's a loan on the property, the bank's going to require that you have flood insurance and you're going to have certain limits on that. But if you look back at some of the flooding that occurred, like in Houston, for example, if you look at the map, half of those people that got flooded out were not in flood zones. The FEMA doesn't update their maps very frequently. They do it as often as they can, but it's not, they might not get out to the same place for 15 or 20 years. Right.
Yeah.
And, the amount of development that takes place can affect where floodwaters go, and you just never know. So it's part of doing a full risk assessment on your property to determine we may not be in a flood zone, but are we flood zone adjacent? Is there anything going on that would potentially put us at risk for a flood?
No, perfect. Absolutely. And I'm just trying to think if there's any other things. So I think that, a lot of the stuff that we've covered here so far is just great information. I think that, I was really happy that you came on to do this episode, Ryan, just because this was something I wanted to cover for a while, just to kind of talk about commercial insurance, particularly commercial real estate insurance, and just some of the ins and outs. I just think that this is really good information for people. And for, if you are in the banking space, if you work for a bank or if you're a lender or something like that, like this is really good information to have, because when you're lending money and you're going out and you're looking at properties, or people are thinking about buying properties, it gives you a lot of great information to perhaps provide some great questions for your customer to basically say, hey, listen, I kind of noticed this or that about the property. I don't really know. I'm not the expert, but when you talk to your insurance person, you might want to ask them, this is A, B, C, or D, and that's good. It leads to good, conversations and good information being, shared amongst the parties. So this is fantastic. So, if I could switch gears for a minute here, Sure. Can you tell us about just maybe a little bit about yourself? Like, how did you end up getting into this business? How did you kind of end up, like, what led you to want to start, Stillwell Partners?
Yeah, so it's the joke in our industry, nobody gets into insurance on purpose, right? So I graduated from college and I didn't really know what I wanted to do. My extended family owned an insurance agency right here in Montgomery County, and it was an easy place for me to go and have a job, right? And it's like, well, start out here and we'll see how things go, and maybe I'll do something else later. Always in the back of my head, I had a desire to start my own business, but I never had an idea of what I would do. Probably about 10, 12 years ago, I started doing more of the sales work in that insurance agency, just talking to business owners and understanding that a little bit of education goes a long way in building a relationship with business owners. And it was for, a lot of what I did at that time was workers' comp. So it was fairly simple from the insurance perspective. But I really enjoyed that part and trying to understand the ways that I could help them more. So in the end of 2019, I was decided to go out on my own at some point in time in the near future, started putting the plans in place, and then 2020 COVID hit, and then I quit my job. So that's where I am now.
Interesting. No, I always like to ask that question because I'm always so fascinated by how people end up kind of where they are, how they end up running different businesses, how they end up in different spots and companies. Because a lot of times it's not what you think. A lot of times people could take very different paths in life to get to certain places. So that's why I'm always curious. So okay. I always wrap up interviews with the last couple questions here. Do you have any favorite business books, and do you have a favorite like business related movie?
So I thought about this a little bit, and there's a book that I read a while ago. Actually, I listened to it on audio. It's a book called The Road Less Stupid.
Interesting. Okay.
Which is one you don't hear about so often, but it's very good. Like the premise is, a lot of people get into business and they want to run, right? But they could be running in the wrong direction, and running in the wrong direction is stupid, right? Like that's just kind of like the way the guy talks about it, and talks about like how like the thought process of a business owner and the different hats you have to wear. It was just, it's not so much as like a guide to running your business, but as like somebody who ran a business, was very successful and lost it all and then tried again, like the lessons that he learned. So that was a good one. There's not a ton of business movies that I like. Probably the one that I've enjoyed the most was The Big Short, about the financial crisis, 2008, and just the whole backstory behind that, and just a very well done movie. So
no, that's great. I loved the book. And what was the book? What was the full name again?
The Road Less Stupid.
The Road Less Stupid. Okay, yeah, no, I think that's great. I'm gonna definitely I think that's a great recommendation. I'm definitely gonna check that out. That sounds very interesting. It almost sounds like a little bit like. Did you ever hear of the book called The E-Myth?
Yeah, that's another great one. I was in a group last month. We were talking about that book in depth. Yeah.
Yeah. So the E-Myth is really about the person who the author would describe as a tactician in other words, they're really good at this one aspect of the business, but now they're interested in becoming a business owner. And all of a sudden it's like, okay, well, you now need to be good at all of this stuff in running a business. And there's all these different facets to it. And you've got to understand all those different aspects. You can't just be this tactician working in this one little area of the company. So it's a great, the E-Myth is a great book. I recommend it to people. This book sounds really good too. So I definitely appreciate the recommendation. I will make sure to check that out. And I'm sure some of our listeners will check it out as well. And as always, The Big Short's a great one. I've had many people that have come on to do interviews. That seems to be one of the more common ones that people really like. So that's always a good one. So okay, so just wrapping up, Ryan, if anybody wanted to contact you, what would be the best way for them to do that?
So you can find me on LinkedIn. LinkedIn's a good place for me. You can also reach out to me directly. All my contact information is listed. It's available on LinkedIn, but also at my website, stillwellriskpartners.com. Oh,
fantastic. And you always will have an open invitation here, Ryan. If there's anything important that you'd like to come back, if you think that, if you think that the audience, if it's some changes in the insurance industry, new things that are happening, maybe new products, whatever it may be, know that you're always welcome. And I hope that you'll come back on again soon.
Well, Joe, it's a pleasure. Thank you for having me.
Awesome. Thank you so much, Ryan. All right, everybody. That was Ryan Stillwell with Stillwell Risk Partners. I hope that everybody enjoyed that interview today. I hope we all learned a little bit about something about commercial property insurance and commercial business insurance in general. But if you like this episode, please make sure to like, share, and subscribe, as that always helps the channel. Please make sure to leave your comments down below. Remember, we are on YouTube, Rumble, and all major podcast platforms. Check out the live stream every Friday night at 7 p.m. Live on YouTube, and check out some of the other content on the channel. But I hope everyone has an awesome day, and we'll see everybody again real soon. Thanks a lot.